Amish Munshi is now joining us. Amish, good afternoon.
Afternoon.
You look at numbers very closely. Even in your earlier role, you were very focused on numbers. Do you think this quarter, large cap numbers, I mean, ADANI, what a beat, Reliance, great set of numbers. Maybe Axis Bank is not that great, but mostly large cap numbers are looking good.
Yeah, Pankaj, I completely agree with you. I think the way the result season has started and panned out up till now, while it's still early days, so to say, to have the complete picture. But I think it's quite interesting what we're seeing is that, when you look at when the large cap companies are performing, the numbers are not only meeting the estimates, but actually are beating the estimates. So I think the entire confidence into recovery of the earnings cycle, which, actually started for the March quarter numbers, got carried on for the June numbers. And September numbers are also carrying it forward. And I think the large cap companies at this point of time, for whatever the numbers have come out across sectors, the numbers seems to be quite heartening. And as I said, they seems to be actually beating the estimates.
Right. So, how would you look at, say, IT? IT is not giving great numbers on a growth basis. We had Cadila numbers today. It was, of course, not a representation of pharma. We have Dr. Reddy's numbers. So IT and pharma, which was providing that YOY strength, is not giving. Do you think sufficient companies will make up for that?
We feel that definitely there are sector-related issues. There could be company-related issues. Both the sectors you talked about, whether it's IT or whether it's pharma. So definitely there are challenges in IT. There are much more fundamental challenges the entire industry is going through. Probably a transformation phase at this point of time, plus a very large base of growth over the last 25-30 years is itself slowing down the numbers in terms of pure growth. Having said that, if you see in terms of valuations, these companies, at least for IT sector, looks quite attractive. Pharma would settle down because, as we know, over last year and a half, 2 years, they've gone through a lot of challenges in terms of US FDA and stuff like that, which will over a period of time, we believe over next 2 or 3 quarters will start going back, and the numbers would start looking. So in terms of valuations, both IT and pharma from part of a core portfolio of investors look attractive. But we believe there is another trend which is currently probably playing out, that globally investors are chasing growth. And in that, when the money which is coming in to emerging markets, particularly one of the fastest growing markets like India, probably investors are telling that they don't want an exposure to businesses which are somewhere or the other have global linkages, and they would rather much more focus on the domestic Indian story, which is the prime reason why those investments are coming in the first place to chase growth. And I think that's probably another tactical part in terms of allocation. And lastly, both these sectors across the portfolios of investors, both domestic as well as globally, are quite well represented, if not overweight, at least near to the equal weight kind of a thing. So I think these 2-3 factors, particularly for sectors like IT and pharma you mentioned, are playing out at this point of time.
Right. But in terms of these sectors, will other sectors make up? Will a metal start to look good? Will a steel company which is reporting losses start to make profit and make up for it in this quarter?
Yeah, so those base effects, so for example, it could be, some of the PSU banks, it could be commodities, it could be oil and gas. So some of those will definitely, and if the banking numbers look good, the kind of weightage that sector carries in the indices also. So at least in terms from purely from the Sensex or the Nifty P and EPS would start looking good.
What do you make of the move in ICICI or any corporate bank? Do you think that one should focus on the Axis Bank numbers, which reflects what's happening in the corporate banking space, or one should look at the recent deal after which ICICI has done well and things will start to look better?
No, so I think we are very clear in terms of NPA resolution, which is the crux of the challenges which corporate-facing banks are, experiencing at this point of time. Unless and until we see actually a sustainable improvement in the global commodity prices, we feel that probably both the NPA recovery as well as that problem will take more time than probably what the market anticipates at the point of time. So while some of the exposures in terms of local factors like power or roads or some of the other infrastructure related lending could over a period of time sort out. But our belief is that if we want to see a much more macro level improvement in the NPAs for corporate facing banks, and you see where the majority of the pain is in terms of NPA books, most of it is coming from the businesses which are much more globally faced and predominantly coming from global commodities cycle. So unless and until that cycle picks up, we feel that probably there is still some time away in terms of NPA resolution, so to say. And that's why the corporate-facing banks will continue to face pressure.
Amish, just stay on with us. We're taking a break. Coming back in 2 minutes. Don't go anywhere. We have some more questions from Amish on the other side. About 8-10 minutes remaining for markets to shut. If we just look at the Nifty, it's down. It breached the 8600 level mark for just a bit, and then we recovered from there, down about 72 points. Now, HUL numbers awaited. They could come out anytime soon. Hero numbers could come out anytime soon. So both those numbers would be important. Even if they come out now, the majority of the reaction may happen actually tomorrow morning. We were talking to Amish. He's still with us. Amish, HUL, ITC, you think the traditional FMCG names are now shifting? People are looking at oil marketing companies, airlines. Is that the sense that you're getting?
No, definitely. I think, see, what is happening is that in terms of FMCG companies which you're talking about, there is at least a temporary headwind in terms of, the valuations, in terms of pure PE multiple kind of a thing. But we believe that for long-term investors, definitely it's a sweet spot, if you have 3 to 5 years kind of a view. And we still have to see the complete impact of monsoon, 7th pay commission, benign inflation, lower interest rates, lower penetration, higher aspirations. So these things will play out over a period of time. So at this point of time, what we've seen is over last 6 months to 1 year, probably within the spending basket, the shift of the investors have moved from non-discretionary to discretionary, which seems to be the sweet spot at this point of time.
Right. So, how would you look at HUL ITC? Would that be the best way to play the consumption story, or you would look at a durable company to play the consumption story? You would look at an airline company to play the consumption story? No,
so we are not positive on the airlines as a business itself because the major right of them is oil, and you have no control over your major costs, so which is almost 45 to 50% of your overall cost. That's one. Secondly, there is very high competitive intensity. Globally, we have seen very few companies making actual profits, operating profits, cash flows, ROC, ROEs. So in that sense, that's one of the sectors which does not fit into fundamental, attractive valuation zone. And there is extremely high competition within the sector with no pricing power with any of the players, including the leading ones. So we tend to a little be away from that. But probably as compared to that, what we really like is something in travel tourism, for example, hotels, which could be a good place, instead of airlines.
Right, so that should be the place to be in. Let's welcome in Pradip Hotchandani also at this point. Pradip, HUL, any view? Results should come out anytime soon.
Hi, good afternoon, Pankaj. HUL, we have been of the opinion that it is, along with ITC, in a broad consolidation. If you look at the chart of last 1 year or so, 980 is the region where it is finding tough resistance, and on the lower side, at around 770 is the region where it is having a good support. So it had a decent run up over last couple of years, and last 1 year, as I mentioned, it's stuck in this range. So I think on the lower side, 770 is the crucial support, and on the higher side, 950, 970 is the crucial resistance area. For the timing, we would watch out for, wait for this consolidation to get over for taking a fresh positive or negative.
Right. Axis Bank, what will be your view, Pradeep?
So clearly it has broken its key support levels. 510 was important support on its weekly charts, and 490 happened to be its 200-day moving average. So we were watching out for this 510, 490 as a crucial support area, which it seems it will be closing below that with a good volume. So I think it can fall to around 460, 465 kind of region where its 34-month moving average is placed. But clearly we think that over next couple of months, this stock will underperform its banking peers, and we would recommend avoid on the stock.
Right. In terms of Axis Bank, Amish, what do you make of the numbers? Even something like other Yes Bank numbers were pretty solid, but with Axis, what do you think went wrong?
No, I think definitely the numbers were disappointing, and probably over last 6 months, the kind of some sort of clarity which the management had given in terms of troubled assets and the book and the likelihood of slippages within that. Probably over last 2 quarters, there has been a further deterioration, it seems, from the numbers, and definitely market was not prepared for this, and you're seeing that being reflected in the stock price itself.
Right. As far as something like Axis Bank is concerned, at what time price to book would you be comfortable looking at the name?
No, at this point of time, definitely we have absolutely focused on private sector banks which are retail focused and housing finance companies. We don't like, currently any banks with corporate exposure.
Right. Pradeep, how would you look at, probably an LIC Housing Finance? So results were good, but after the results, it's fallen back to the levels of 585. You think, again, it's telling you that there are some sellers on the higher side?
So no, Pankaj, in NBFC space, housing finance has been our preferred bet over last couple of months. And looking at the sharp run up in other NBFC areas, we were betting on housing finance as a safer bet. And these stocks have given decent return over last couple of months. DHFL, we are working with a target of 325, about 250. Those have been achieved. Indiabulls housing is something we even like at current levels. There we have a pending target of 1080. Talking particularly about LIC housing, it had made a negative divergence on weekly charts recently after a steep run up. So I think some sort of consolidation is on the cards, but on the dips it will continue to be a buy for us. And I think on the higher side, 625 is the immediate target resistance, which is the top it made recently. Once that is taken out, we can talk about higher levels, but on dips, definitely LIC housing should be accumulated.
Right. Amish, what will be the housing names that you like?
So in housing finance, I think out of the bouquet, what we like is definitely Group Finance and LIC Housing.
Right. Just for LIC Housing Finance, because of the valuation, it is attractive?
No, definitely the kind of franchise it has and the book and the asset quality. So both these names we predominantly like before that.
Right. As far as Asian Paints are concerned, did you see the numbers in terms of volumes? How 12% volume growth versus estimate of 13, but still you would give it 12% is a very good number?
Yeah, I think double-digit volume growth is quite heartening, and obviously there has been tailwinds for the entire industry also in terms of the lower oil prices. So you've seen that in margins also. So I think paints is again one sector which were quite positive under consumer discretionary, and the industry is quite consolidated. You have 4 or 5 major players. Asian Paints obviously continues to have a dominant market share, and as a long-term team, they definitely like the entire sector.
Right. How would you look at, Jubilant FoodWorks? I'll tell you about the numbers. So same-store sales growth was good, but the margins declined. So maybe they, upped their aggression in the market. That's what, we can infer from these numbers. As far as, such activity is concerned, would you be worried about such activity, or you would be happy that, the brand strength is such that if they can give a little bit of discounts, people will just be attracted to the brand?
See, we feel that that's one area where the customers, requirements change so frequently. It's over a sustainable period of time. As a business model, it's quite difficult to come out with the right product at the right price at the right time, which meets the customer's specific requirements. So at some point of time, you might see a very long period of patch where, the company is not able to perform because some of your products are just not getting clicked with the markets kind of a thing. So, and the valuation comfort is not there. So we would probably like to stay away with such kind of businesses.
Right. As far as, DABUR is concerned, we just heard the management. The management sounded quite positive. What would be your view?
Yeah, so what we're seeing is a little early days. I think the expectation of the revival of the rural demand, which is actually what is lacking at this point of time for the entire FMCG industry also, like so many other sectors. We need to probably wait till at least next 3-4 months, first the Kharif crop, and then, what are the reports coming in for Rabi. So it's early days, but like I said, that FMCG, while keeping in mind the short-term valuations are on a higher side and expensive, but that's a spot which we continue to like.
Right. I'll just come back to you, Pradeep, and Amish, just request you to stay on. About a minute remaining for markets to shut, or slightly higher than that. So about 79 points for the markets on the lower side. That's what the Nifty is indicating. Axis Bank clearly the top loser, 8% down. ITC 238. It was volatile, but on the positive, absolutely flat. Idea was up 4%. Adani Ports gave actually a correction today. It was up 12% yesterday, 2% down for Adani Ports. Tata Steel has gone down 5%. No particular reason, but you look at Tata Steel, you look at Tata Motors is down 5%. All of these Tata stocks are going down. Maybe there is some uncertainty, regarding the development that we've been having for the last few days. Bank of Baroda down 1%. Tech Mahindra down 2%, 422. Reliance 1054, and Power Grid was down close to about 1%, 175. Coal India flat with a negative bias, HUL up about 1%, 842, and BPCL down close to 1%, 676 for BPCL. HDFC Limited a 0.25% down, Zee Entertainment 515, it declared numbers yesterday. NDPC 151 and HCL Tech down about 1.8%. GAIL 433, Infosys down 4 rupees, Ambuja Cement 247, 248, and Wipro down close to about 2%, 471. Tata Motors DVR down 6% to 342. We spoke about Tata Motors, so even DVR is down. That just tells you the sort of uncertainty that is there in these Tata Group's names right now. 2% down for Aurobindo, and Cipla is down about 1%, 578. Axis Bank 8% down, was the top loser. Look at the volumes, 38 million shares. I mean, I would not remember when we have seen such volumes for Axis Bank. 38.7 million shares traded, 8.5% decline, by far the top loser. Tata Motors DVR 5% down, 343. Again, it's a big loser. Don't forget that 1.3 million shares for a company like Tata Motors DVR means a lot. So there is actually delivery-based selling into Tata Motors DVR. Tata Steel, it went down in the last half an hour or maybe about 45 minutes. 5% down, 392, 393 for Tata Steel. 8 million shares traded, 22 rupees down, and looking in extremely on the weak side. Let's look at Tata Motors as well. I think that would have also not gone down pretty well, or in fact, we would have seen some sort of correction into these Tata names. Tata Motors, no respite, 527, 4% down. Tata Com, Tata Chemical, all of these names were actually down yesterday. Maybe, there is some sort of an impact that we are seeing today as well. Tata Global, but in morning, this impact was not there. So just look at Tata Communication, it's down 5%. Tata Chemical was down 4%. No particular news flow apart from, of course, the headlines that it has been making for a while. Amish, with such decline coming in for Tata Group stocks, would it be a buying opportunity, or you would just wait things to settle down, or it can be because of derivatives also which expire tomorrow?
Yeah, so my sense is that investors should wait out, let the entire thing play out. Probably it can take 15 days, 1 month, I don't know. But companies per se, I think one should, before reacting, should just wait out, let the flows, news flows come in, and then take a decision. But one thing for sure, not to react immediately or just based on some news flows which are unconfirmed.
Can you just tell us that which of the Tata Group stocks is something that you like? You may not like it at this price, but which are the names that you like structurally? And say if there is another 10% decline, you would want to look at them. Again, I'm emphasizing that you may not like it now because of the uncertainty at the chairman level, but which are names that you like?
Yeah, so from a portfolio perspective, the top two names would be TCS and Tata Motors.
Except TCS.
Yeah, and then followed by Tata Steel.
Right. Anything on Indian Hotels, Tata Com, Tata Chemical? They are also interesting names which have done well.
Yeah. So within the space, like I mentioned, that we like hotel as an industry, and obviously Indian Hotels being now being the second largest player in India, we continue to like that.
Pradip, what will be your view on Tata stocks? If you could just run through the stocks, let's start with Tata Motors. At what level would you be tempted to buy?
So in Tata Pack, Tata Motors and Tata Communication have been two stocks where we have been bullish for quite some time. If you remember, Tata Motors, we had recommended around 460 for a target of around 580, 590. For Tata Motors, 590, 600 is a very strong resistance area where its previous top is also placed. So kind of double top formation is placed around 600. So that is a very crucial hurdle, and after a steep run up, obviously it found resistance over there. I think I would be comfortable buying around 470, 500 region. That's where its major moving averages are placed. So if one wants to start getting into stock, 500, 470 would be a very good area to get into Tata Motors. Tata Communication, as I mentioned, continues to look good. I think there also we had seen a steep run up. Closer to 570, 580 would be a very good region to get into the stock. One stock from Tata Pack where we had recently turned bullish, but because of this news flow, it has been going down, is Tata Global. 147, 150 was a very crucial resistance area above which it broke out recently, and we are working with a target of around 175 to 180. So I think here one can start accumulating the stock. We still like the stock. Around 130 is a very strong support area for Tata Global, with a stop loss of which one can get into the stock at current levels.
Right. How would you look at Tata Steel? Now, that's one name which has done very well. And steel stocks also have done well. So now it is going down because of this uncertainty. But at the end of the day, it's a big steel play.
Yeah, Pankaj, this is also a stock where we have been bullish, but there also upside targets have been achieved. On monthly charts, upper band of Bollinger is placed around 430, and from where the stock has reversed. So I think 430 is a very tough resistance area on major long-term charts that needs to be taken out. On the downside, I think crucial support would come around closer to 370 region, where its 30 or 20-week moving average is placed. So if one wants to bottom fish, then this would be a very good area, 370 kind of region. But as I mentioned, major upside targets for Tata Steel have been achieved, and 420, 425 is a very tough resistance area.
Right. Amish, you look at investment from a long-term perspective. And, of course, you will not have a view on, changes at the Tata level. But, when such big change happens, can you just tell for our viewers that what sort of uncertainty gets created? Say you can take an example of Tata Steel, which is trying to deleverage, or maybe Tata Com. But what is the sort of uncertainty that, comes in within an investor's mind?
No, I think the first would be to have some sort of clarity that what really happened. I think that's the starting point where the anxiety gets over and you have something to start thinking about. So that's one. And secondly, then when the actual announcement happens, as and when you have the new person selected, elected, whatever it is, kind of a thing. Then wait out for the kind of strategy, vision for the entire group or the business, as the case may be, or the company, which pans out over a period of time. So I think the first thing is, like I mentioned, I think the first obviously step is not to panic. The second one is to wait for the events to play out, the announcements to happen, and then third is to look at the strategy once the concrete details, the factual details are available.
Right. See, you like names like Tata Motors, TCS. They are not facing any major issues. But let's take an example of Tata Steel. The sort of asset sales that they have done, or they would probably need to do. You think that it does require tough management? That would be one of the key things, for the balance sheet to now start to look good after, say, maybe 2 years down the line.
I think the biggest challenge has happened because of the entire steel cycle, right? So so I don't look at it as a tough management or a lenient management. Ultimately what we're looking at is good stroke great managements to run businesses, and as far as their condition is satisfied, I think a lot of work is done.
Right. And in these Tata names, just stay away till the time you get any clarity. I mean, whatever would have happened in the boardroom.
No, absolutely. I think unless and until you have all the facts and the clarity, I think investors just should stay put. And
Pradip, how would you look at Tata Communication? From the levels of 700, it's fallen to 620 in 2 days.
I think on the daily charts, it's definitely made a negative divergence. So in the short term, I expect the stock to correct a bit. I think 620 is the current close. 570, 575 is the good support area. However, on the longer term chart, still oscillators are showing a positive setup. So I think I would be comfortable getting back into the stock around 570 kind of level. And I think it's good for further up move. 683 is current recent top. Once that is taken out, we can talk about 750, 770 kind of levels in 3 to 4 quarters kind of time frame. So I would be comfortable getting into the stock around 580, 570 region.
Right. And Tata Chemical as well, because that's also a name which has corrected quite a bit in 2 days.
So here it had a decent run up, and it made a negative divergence on weekly chart. So here I think the correction should continue, and on the lower side I think 510, 520 is the region where it will try to find its support. But I think all the stock we mentioned about Tata Communication still looks good on its longer term chart. So I would be comfortable going for Tata Communication rather than any other stock.
Right. Do you look at Adani ports? What are the levels that you would look at? It was up 12% yesterday. It's still just down 2%. So now looking at the market close and some of the other large cap, you can still say that it's done decently well.
Yeah, and as a disclosure, this is our Techno Funda pick. We had recommended a buy at around 265 for a target of 345 from a perspective of 8 to 10 months. So we continue to like the stock, and 345, 350 is the target we are working with. So any dip should be a good buying opportunity for Adani Port, and 350 is the target we are working with.
Right. I think HUL has also just declared numbers. Just before we move on, Amish, HUL, outlook on rural would be more important. It would be more interesting rather than any of the other businesses or outlook.
Yeah, sure. And I think the underlying volume growth, I think that really will be the key for all FMCG names.
As far as HUL numbers are concerned, so I have the numbers here with me. The net profit has come in at 2270 crores. That's broadly the number that we are looking at. In terms of net revenue, it's come in at 1096 crores. Estimate was 1050 odd crores in terms of estimates. 1050, no, net profit is 1096 crores. Their sales are, their profitability, sorry for that. So 1096 for the numbers, and about 1050 was what the street was estimating. Their revenue numbers are looking in good. So they've come in at 8,480 crores, and we were expecting close to 8,100 crores. Again, there could be a lot of one-off in these revenues. What's the sort of advertising expense, how they've capitalized it, have they made it via the new ANDS? So just looking at the numbers, one cannot get excited. And the domestic consumer business growth has come in at 1.8%. So Amish, just the point that you want to know, sales are higher by 10%, but still the domestic consumer business growth is up 1.8%. That tells that still the recovery is far away.
Yeah, volumes growth of 1.8% definitely. So that means recovery is still some time away.
Right, but in terms of the outlook, the management would start to speak anytime soon. What would you eye out for? If they say that they are seeing underlying growth better, we are closer to the festive season, if they give a good outlook, would that be something that would be substantial for the stock?
No, I would not think it would be substantial, but definitely it will provide some comfort. That's one. And I think secondly, other important part now slowly happening, if you see this quarter's numbers also across the board, is slowly we are seeing the impact of, the input cost inflation, which is the reverse situation of the last probably year and a half. And I think going forward, we need to be a little more mindful. So just to give you an example, while we are not discussing between February and now, actually the oil prices have doubled, right? From $26, which was the low, we are currently at $51, $52. Because it's not pinching at this point of time, but that doesn't mean that it should be out of the radar. So I think we need to be a little bit of careful when you're seeing line by line item. One thing where there is inflation is definitely in terms of input costs. I think slowly the management commentaries are also coming out that the kind of comfort they had in terms of input costs is slowly going away, and I think one needs to be a little mindful of that also.
Right, Amish, thank you so much. Pradeep, always a pleasure.